Good evening. This is Tom Alexander. It is Thursday, September 21st. It is 6:50 p.m. Eastern Time in beautiful Charleston, South Carolina. I'm going to do a special stock market update in light of the last couple of days' action. A couple of things. I do free reports. I send out notifications of those reports usually. If you want to receive those notifications and free stuff, send me an email to tom@alexandertrading.com. I'll put you on that list. You can go to the website, alexandertrading.com, and you can see the free weekend updates. And I encourage you strongly to visit the website this evening and go back and look at the report from this past weekend, because I'm basically going to review this evening what was said then and follow it through to what has happened since last Friday's close into this week, into Thursday's close, and what we might be looking at going ahead. You know, there are times in the market, actually, there are a lot of times in the market where you simply cannot know what's going on. And almost all traders, want to force things. And you eventually learn, if you survive as a trader, that you can't do that. So the 3 or 4% of the people that finally make it in trading have learned to be patient. When you're patient, there are certain times where you can find an edge, where the probabilities of something happening are greater than random. And we had a situation unfolding like that a week ago, for last Friday's close. And I'm going to show a chart here. And this is a market profile chart. And again, people associate me with market profile. I am not a market profile trader. I'm an auction market trader. However, I have worked with market profile almost since its inception. It is not magic. It is a graphing format. It can be a very useful tool. It is a means to an end. It is not an end in itself. Right now, it's extremely valuable, because it is what it's designed to do is to help us to identify market condition. The market condition is defined by auction market principles. There's basically two market conditions. You have an initiative phase or trend, and then you have a consolidation or balance. And the market is constantly transitioning from one phase to another in all degrees of time all the time. And if you know that, you can find an edge. And if you know that, you can line up these different time frames and find bigger edges. One of those was last Friday. What you see on the screen is a quarterly auction of the SPX, meaning each one of these, each profile unit is a quarter of trade. Each letter, if I split this out, is 1 week. Now, last weekend, we closed right here. And you can go to the website, alexandertrading.com, look under weekend reports, and you'll see this in there, and you'll see my comments. So last Friday, we closed right at the midpoint of an extremely mature and extremely tight quarterly auction. So you knew the market was sooner rather than later going to trade to or through either the upper extreme or the lower extreme. Now, some of you may be sitting there saying, well, yeah, well, that's no help, because how do you know if it's going up or down? Well, you don't know. But Friday gave you a clue. Friday was a wide range down day. Now, it was a wide range down day in a very specific context. It came in the context of a market that, in the larger degree time frame, was extremely coiled up and likely to begin an initiative move in that time frame. So the first clue that this was going to be down was last Friday. And so we traded down Friday. We sort of did nothing for a day or so, and then the bottom fell out really beginning yesterday. And we followed through. Now, again, this is a weekly chart, so this is this week so far. And you can see we've actually traded closed below the low extreme of the quarter as of the close on Thursday evening. Now, there are a number of things that could be going on here. We could be in the beginning of another distribution, another range. And this could be the top of that range. And then you have this market that trades lower, maybe into, and this would be a logical place. This is a high volume node way down here. That doesn't have to do that, but this market is not going to go down for the next month at the same rate of change that it has traded lower in the last 2 days. Even if you go back and look at October 2008, it didn't do that. You had violent rallies against the decline all the way down into the ultimate bottom. So what we'll be looking for next, let's go to a cash chart. Here's the cash chart. Now, this is something I discussed in the live trade room yesterday at the close yesterday. I said we needed to get, another decline would be roughly 1.4%. I also said in the live trade room for members that it would be, if this was an initiative phase, it would be likely that we would gap down and could very easily have another wide range day. Well, that's come to pass. So now where are we and where could we stop? Well, I don't know. And here's another secret. Nobody else does either. I don't use magic numbers. I trade the market, I follow the market, and I use market internals. Now, something occurred today internally in the indices that has not occurred in quite a while. What is that, you may ask? We had a negative 2,000 breadth reading. Breadth closed today at negative 2,028. So I can add an arrow. And you can see the last time we closed negative 2,000 was back here, way back in early July. And then before that, it was way back in March. Now, does this have to mark a bottom? Absolutely not. You can see on my screen that the SPX is really right on the verge of an elevator shaft, and this is consistent with the profile view, the weekly profile view that I just showed you. There isn't much of a cluster of volume, which tends to attract price until you get down into here. Now, it could stop anywhere. I would not, even if it's going to reach this level, I don't think it will trade straight there. I think you'll get some pushback first. And as a matter of fact, I pointed out in the live trade room today that the Russell 2000 has now been down 5 consecutive days. That's real unusual. It's very rare. And the SPX has been down, I think, 4 out of the last 5 days, along with the NDX and the Dow. And so you're starting short term, you're starting to get stretched. And what that tells me is that you want to be careful about pressing the short side of this market. If we gap down again in the morning and we trade straight down for another hour or so, frankly, from a day trade perspective, I'd be looking for longs then, but that's not really the focus of this report. This report is to give you an intermediate term view. Now, the 10-day and the 5-day moving average of NYSE advancing issues that I use, the red is the 10-day, the green is the 5-day, have rolled over again and are likely to reach extremes prior to us finding a bottom. Today could well be a momentum low. That doesn't mean it's a price low. We could go a lot lower over the next day or two, but it's a little unusual to have negative 2,000 breadth days back to back, or even 2 out of 3 days. Now you certainly can do that. Be a little unusual. So you don't really trade for the unusual. So what I would be looking for here is, if today wasn't a momentum low, I think we'll see a momentum low tomorrow or early Monday, and then the market will become more two-sided. And at that point in time, we'll take a look at where this work is, where NYSE data is, and we'll also take a look at market structure. But what we have now is perhaps the beginning of another distribution range. Let's see, another distribution range where this is your range, and then you reach some stopping price, and then you develop around that range and you form another Gaussian shape, similar to what we had here. So this could be just the beginning. This could be part of the distribution range that is going to comprise perhaps yesterday is the top of the range for the next quarter. With considering, I realize the quarter's not over yet, the new quarter hasn't begun, but this has the potential to be the upper extreme of another distribution range. Each one of these profile units is a distribution. It's a range. It contains a range, and it contains a high volume node. It contains areas of relative value, etc. And this could be just the beginning phase of that. Markets develop in 3 stages. You have an initiative phase, a trend, you have a stopping price, you have development. That's what you see in all degrees of time all the time. So guys, that's where we are. It's a real fun, interesting time. Volatile markets. I like volatile markets. I think they're easier to trade than grind. I think most traders find volatile markets easier to trade. There should be great opportunities on both sides of this market. I will have another update out probably by Sunday evening. You guys enjoy tomorrow and your weekend. I'll speak with you again soon.